After getting spanked to start the year off, we put in a real workman's type of week over the last few days to dig ourselves out of the hole that we started in. In today's video, I'm going to show you guys a few of the trades that allowed us to do that, along with one that you can still get involved with. I'm also going to lend you guys some advice that could potentially save your trading year. Now, before I get the intro going, do me a favor, hit that like button, hit that subscribe button, and I'll see you guys in a few seconds. Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradingPower.com, the premier online source for trading education. And thank you once again for joining me for my weekend review video. As I mentioned a little bit earlier, today I'm going to show you a few of the trades we took to end off our really great week of trading in the markets, along with a potential opportunity that you guys can get involved with as well. But first, I want to talk about the grind of trading. And the idea for this came from a trading friend of mine, Elaine, who wrote a blog post. And something that really caught my attention in that blog post was she mentioned that a lot of traders, and I guess this goes for life in general too, a lot of traders want and seek instant gratification. They don't want to put into work. They don't want to put into effort. They don't want to go through any pain. They want to just do it, get involved, and see the benefit right away. And unfortunately, I hate to burst your bubble out there, but that is not the truth of trading. In reality, trading is a grind. Yes, it is. It can be sexy when you see the results. You can grow the lifestyle that you desire. If you're into big cars or big houses and fancy cars, you can achieve that. If you're into making big charitable donations to your favorite charity, you can do that. You can have whatever you want out of trading, but it is not easy, guys, by any means. That is why 90+% of traders fail. The reality of trading is that it's a grind. It's really like going into the boxing ring and going 12 rounds in a prize fight. You know, you're giving a few punches, but you're getting a few back. And this was a perfect example of that week. We came into this week, after a lot of directional movement last week, we came into this week seeing a lot of what we like to call structured consolidation. And that means the type of sideways movement, the type of consolidation that yields advanced patterns. So we knew that it was going to be a busy week for you guys that are pattern traders, and boy, was it ever. I don't have the count in front of me, I don't think, but we had to take probably at least 10 patterns this week, and it was a great experience because it was winner, loser, winner, winner, loser, loser, winner, 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 loser, back and forth, again, like a prize fight. It wasn't the sexy, hey, let's just bring our equity curve up here. It was really a back and forth battle. Actually, let me I'll do some magic editing. Let me actually bring up an Excel spreadsheet and give you a visual representation of how our week went by showing you guys the numbers. All right, so what I want to show you guys is a visual representation of our equity curve for this week of trading in the syndicate. Now, I'm going to type our trades in one by one. I don't want you to pay attention to the pip amount. That's not the point of this conversation. I want you to pay attention to the ebbs and flows and how the up and down, the grind, really the consolidation that trading brings. And that's one of the benefits of being in our syndicate program. You get to see the reality of trading. You get to see the very, very good. You get to see the very, very bad. You get to see the very, very difficult day in and day out of the market. So again, sit back, just look at the direction of the curve, and just, if you're not a syndicate member, envision yourself going through this battle over the last few days of trading. Started off the week nice with a 143 pip winner by Jason on the CAD yen, and then we followed it up with a small 22 pip winner on Aussie dollar. But then we went right back down, gave 25 back to the market on a dollar CAD trade, then earned 25 on a New Zealand dollar trade. What? As soon as we get that money in the bank, we gave 22 back on another dollar Canada trade, and then 51 back on a dollar Canada trade. This was right after some crude oil inventory news. We had two patterns back to back. We had to take them both, and well, didn't go our way. But we followed that up with a very nice winner on a pound yen for 68 pips. And then again, minus 23, minus 51, plus 60 minus 28 plus 29, back and forth, plus 16 plus 41. Most of this was for today. We got really hot in the live room today with patterns. I think we nailed about 7 in a row, I think, over the last few days. And boom, finished like this. So you can see as we started off the week, we started off with a bang, and then we went sideways from trade, essentially from trade 2 to trade 12, before finally breaking out of that consolidation and putting in new equity highs. Now, if you're saying to yourself, if you've been a follower of mine for a while, if you've been in our syndicate program, you're saying to yourself, Akil, this looks familiar. Well, what does it look like? Well, let's bring over last year's syndicate equity curve. I know we're not supposed to talk about it. We're starting fresh. It's a brand new year, but I want to show you. Look at the last few days of trading and the pattern that was made on this chart, and then look at the whole last year of trading and the pattern that was made on that chart. The same thing. Just as the market works in fractals, so will your equity curves. You're going to have small battles, trade by trade by trade. You're going to have small battles day by day by day, week by week by week. But it's the big picture that matters, guys, is where do you land when all the dust clears? And this week, we have a few open trades right now. So unless we give it back and find some more and give that back, we're going to end out on the positive side. I doubt we're going to blow 300 pips in a day. But you never know. We never know what the markets have for us. So the key is don't give up on your trading strategy, guys. We see so many traders that start the year off and, maybe they have a bad week. And as soon as they have that one bad week, they give up on their system. Oh, it's not working. It's not working. I'm doing something wrong. And they bounce and find something else. Well, as soon as you give up on what you're doing and you bounce to find something else, guess what starts winning? It happens every time. It's funny. It's not funny if you're involved, but it's funny looking back at it. As soon as you give up on that system and you go to that next system, guess what happens? The previous system starts winning, but you miss all of those profits. The new system you're trading, you happen to jump into that right during a drawdown. And guess what you do? You quit again. As soon as you move on to the next system, that new system starts winning and you miss it and you keep doing that continuous cycle. You got to give it time, guys. Give it time. If you've done your back testing, and hopefully you know what back testing is. If you don't, you probably shouldn't be trading. No, correction. You shouldn't be trading if you haven't back tested your strategy. But if you've done your back testing, you should have belief in your strategy. And when you were crunching the numbers, you weren't looking at the day by day numbers, the week by week numbers. You were looking at the big picture. How is it year by year? How is it in total? And we got to remember that when we're active in the markets day in and day out. Each day does not matter. It's a small little battle. It's the big war that matters the most. Give it time. Give it time. Remember, you guys heard my story. My famous story. I lost about $30,000 in a few weeks. And that wasn't even the worst part. It was really big. This is back when I was managing money. It was really a big deal for me to lose that money. But what hurt even more was that after I had that disastrous week, I quit. I decided not to trade. I turned everything off. I stopped for a week, talked myself back into it, caught my senses, started trading again. And as I reviewed what I missed in the week before, the week that I took off, I realized that I not only would have made back all of my losses, but I would have doubled that as well with wins. And, never again will I let that mistake happen. It was a tough lesson to learn, but it's probably the best thing that could have happened to me as a trader. So I do want to get that lesson out there. I think it's really important. Let's talk about a few of the trades we took this week, and let me show you that trade that you guys can get involved with. All right, we're gonna click over here to TradingView right now. First of all, this was one we took today. Again, this is what I'm talking about with that structured consolidation. You can see the market is just going sideways. To the naked eye, it looks like a bunch of junk. To the experienced trader, you've got pattern after pattern after pattern. We actually caught a double cipher here on the euro this morning. We caught a nice cipher in here, blue, banged out 2 targets early this morning. We got filled the cipher here in green, and currently, as I'm recording this video, we're about 16 pips away from target 1. So we may see another 40 pips on that trade as well. But the trade I want to talk to you about is this. This was a trade on the Aussie CAD. You can see the title, nothing fancy, just pure structure. And if you guys are on TradingView, I try to post one idea a day. Most of my trading ideas go to the syndicate program, and of course in the live room. But I do like to be involved with those that can afford such programs, even though everyone can afford the syndicate. It's $1 to start. Come on. But I do try to post one idea a day on TradingView. So if you're over there, go ahead and give me a follow. Click that little thumbs up button. But we're looking at a purely structure-based trade here on the Aussie CAD. And this is the basics of price action, guys. This is nothing but reading a price chart. All we are doing is looking at the ebbs and flows of the market. We're looking at starting point to swing high. We got an outside return. We got a new structure high, outside return. As you can see by my arrows, all we're looking for is a retest of that previous outside return to hop on the trend. This is called a trend continuation trade or a trend following trade for you, for some of you guys. And if I click this button over here, we had a psychological level as well. There are certain numbers in the market that mean more than other levels. We call them psychological levels. They act very similar to structure, and you'll actually see hidden structure levels there as well as in this case. But you can see price action came right down to that psychological level, bounced right up. And now we've just recently put in new structure highs. Now, for the syndicate, because we're taking orders one in, one out, which means only one target, we try to keep it as simple as possible because we have a lot of entry-level traders in there that have gotten confused in the past. I did remove targets up here. I think we got about 50-something pips off that, and then lost on a bearish bat pattern, a bearish Gartner pattern, lost about 20. So one winner, one loser, 30 pips total. I'll take that all day. However, in my personal trading, I'm still holding on to a portion of this trade because, as I mentioned, I didn't show you guys. I don't think I'm going to show you guys the syndicate video I did, but I feel like I'm mentioning syndicate all the time. I'm not going to show you guys the video I did, but I'm projecting a higher move here. And if we go back to the hourly time frame, here's what you can do to get involved. All you have to do is wait for the same thing we looked at originally. So again, if we go back to our original analysis, we had swing low to swing high, outside return, swing low to swing high, outside return, swing low to swing high, outside return. We actually had a little complex pullback in here. You'll see what I mean in a little bit if I can get my colors to work. This is not my normal trading platform, so forgive me a little bit for being a little messy on here. I'm used to Ninja Trader, but clone this. A little complex pullback for you guys that are Elliott Wave fans. And then we recently just put in a new structure high once again. Now, a new structure high, for you guys that are familiar, tells us what? That the market should go higher, right? And if the market's going to go higher, there's two ways it's going to go about it. It's either going to continue to go straight higher, or it's going to give us another pullback, another outside return back into, back into previous structure. And this is going to give us another opportunity to get long. Either get long for the first time, either trail stops for someone that's showing stops, or even add to your position if you're a true trend following trader. So for you guys looking to get involved in this trade, what you're going to wait for is wait for the pullback. Wait for the pullback, wait for it to come down into your kill zone. It's too early right now for me to create a kill zone, but it's going to be, for me to narrow down a kill zone, but it's going to be inside this technically from here to here, but we're going to go ahead and narrow that down a lot more probably tomorrow in the live room. But you're waiting for that pullback and looking for a chance to hop on this bullish move and continue this trend. Now, if this type of analysis is new to you, if you're not used to, if you don't know how to read a price chart, I spoke to a few traders like that. Here's what I want you to do. I want you to do it right now. Open up a new tab. Go over to tradeempowered.com. That's www.tradeempowered.com. Click on that Learn to Trade tab. I'll do it for you. Click on that Learn to Trade tab, tradeempowered.com. Click on that Learn to Trade tab.
Hi there. Welcome to Trade.
And I want you to scroll down. You can watch and listen to all of this. This is fine. A lot of free material on here. Scroll down and watch the Into the Gray. This was a free webinar we put on a few years ago, or that Jason put on a few years ago, talking about why markets move, how to apply OODA loop theory and IPDE to keep you one step ahead in the markets, how to read a price chart using new structure high, new structure low principles. That's what we just talked about. How to develop a rules-based trading strategy using the if-then syntax. How to trade trend, counter trend, consolidation strategies, and much, much more. Everyone should watch this. And if you're not sure if you watched it or not, watch it again and really pay attention. These are the fundamental basics that everyone needs to know, whether you're going to be a pattern trader, a structured trader, a mechanical trader, a Bollinger Band trader, it doesn't matter. You need to know the fundamental elements of how to read a price chart. So that's it for today, traders. Again, syndicate members, depending on how this closes, depending on how price action acts during the day, I may shoot a video or just shoot you a note on the trade floor to let you guys know if there's another opportunity. If not, we'll look at it in the live room tomorrow. Do me a favor, guys, before you head out, hit that like button, hit that share button, hit that subscribe button. And if you're into hearing rants, I do a lot of rants in the live room. I'm going to share one during the credits of this video. Thank you guys for the support. As always, it really does mean a lot. I'm trying to hit 25,000 subscribers, and I can only do that with your help. So once again, please just do me a favor. If each one of you just hits the like button, hits the subscribe button, and shares this with another trader, that's going to help me reach that goal and give me energy to do these free videos for you each and every week. Until next time, gang, plan your trade your plan. Good luck in the markets for the rest of this week and, of course, the week coming ahead. Live. Oh, you should not be stopped right now. Do not trade live without a plan. That's like driving without a license. It's boring to me, small money. Still, you don't want to develop those habits. You don't even want to be trading demo without a plan. You shouldn't be trading at all without a plan, guys. You need to have a plan. If you're trading without a plan, all you're going to do is develop bad habits. Because guess what happens? This is the worst case scenario. What if you become good? What if you're trading with no plan and you just start killing it? You're making money left and right. Money's flowing out of the monitors. Pockets, you got to buy bigger pants to hold all the cash you got. What happens when you start getting good? You start thinking you can do it forever. I don't need no stinking plan to kill. I'm the man, right? I'm the man. I don't need no stinking plan. I'm making money. Then it eventually ends. It's like when I used to trade the stock market, they always say everyone looks like a genius in the bull market, right? I don't know how many guys have traded stocks. Everyone looks like a genius in the bull market. Meaning when we're in a bull market, you can literally close your eyes and buy whatever stock you want, and there's a good probability of you making money. And everyone's a genius. What happens when the song ends? So you don't want to develop those bad habits because the worst thing that can happen to you, and it sounds weird, you never hear someone say the worst thing that can happen is you make money. But from someone that has been there, the worst thing that can happen is you become successful, but it's not anything that was tested, verifiable, and repeatable. It's just, I don't want to say lucky because there is a lot of skill that goes into it, but it's nothing that has been proven to be consistent. And what that means is that eventually when it stops working, you're either going to lose money or you're going to mentally break down and then start breaking. You're going to start doing something different. Emotions are going to start taking toll. Sometimes you're going to enter aggressive, but then this time you're going to be conservative, but then you're going to be super aggressive, but then super conservative. Then you're going to skip this trade, but take that trade and double down on this trade. And it's just going to panic trading. Yeah. Is Jason started yet, guys? Great. Stapleton, Charles, is he going? It's just not loading up for me. Nope. Okay. Yeah. So I would start developing some rules. It's a good thing. I'm very proud of you for trading small. So you're not trading an amount of money that's going to kill you, but start developing rules. So look at this opportunity. We always talk about reviewing the tape, just like Peyton Manning, just like Tom Brady, right? After the game, get in the film room, start breaking down the film. So take this trade and sit and start asking yourself, okay, is there a reason should I be getting aggressive here? Is he starting? I still don't see him yet. But yeah, please start making some type of rules. Even if your rule is, say, I buy aggressively at retest of structure. Even if it's that simple, just write it down. No one ever has an issue finding winning trades. Like Jason talked about, no one has a problem making 20 pips a day. Right? We can all make 20 pips a day. The problem is we lose more than that. That's the give back, is where people get hurt. The give back. You make 20 pips Monday, 20 pips Tuesday, lose 50 pips on Wednesday. Now you're down 10. You make 20 pips Thursday, 20 pips Friday, lose 50 pips next Monday. Now you're down 20. So yeah, doing nothing can actually save many of you money. But we're not built to think like that. We're built to think that I need to be involved. I need to make money. Therefore, I need to place trades. If I do not place trades, I cannot make money. You see the problem with the mindset there? The mindset is making as much money as possible. I talked to Rick the other day, who's a member of our 12-week transformation. He sent me a copy of his trading plan. He's like, hey, can you look at this? I'm getting started. Just want to, see what you think. And I was like, sure. Sure, Rick. Shoot it over. And you got a good, read through it, good trading psychology and philosophy part. But at the very bottom of it, it said, my goal was to make, I'm just putting this number out there. My goal was to make $100,000 by the end of this, or build my account to $100,000, something like that, by the end of the trading year. And I was like, no, you got to get rid of that. You got to get rid of that. Because as soon as you put a financial goal in there, right? As soon as you put a monetary goal in there, what do you think you're going to do? You're going to end up chasing it, right? It's natural. It's natural. We set goals. We try to achieve them, right? And that's where a lot of problems come in when you start chasing money, right? You start chasing money, right? Think about it like this. Let's go back to the 20 pip a day example. Let's say your goal is to make 20 pips a day, right? You make 20 pips on day one. You're happy, excited, chest bumping, fist pounding, hands slapping. You make 20 pips a day on day one. The next day, you lose 40. So you're down 20, right? You go into Wednesday. What's your mindset? All right, I'm supposed to make 20 pips a day. So Monday, Tuesday, Wednesday, I should be at 60 pips total by the end of Wednesday. Now I lost 40 yesterday, so I'm down at 20. So I've got to make 80 pips today to get back on track. And you take that trade, right? You fire off this Aussie Canada trade. It's rolling. You're supposed to take stops off right here. This is your target. You're supposed to take targets off right here. Here's your target, right? Boom. 33 pips. More than your 20 pip a day average. You're on point, right? You got your one good trade. You're making your 20 pips. You're completing your goal. But then what happens? You're like, man, I need to make 40 to get back on right, or I need to make what was it, 60, whatever number. I need to make more to get back on target. So you hold it. Right? Have you guys been here before? Give me a yes if you've ever been here. You hold it because you want more. There's a big green candle. It's got so much momentum. It's got to go higher. It's got to break above, right? It's got to break above. There's so much momentum in the markets. Right? So you hold it. Eyes are getting big. You're like, I'm gonna make up for Wednesday or for Tuesday's losses and get back on track. Shut your chart down for a little bit. Head over to Amazon. Start thinking about how you're gonna spend your money. Looking at drones. Oh, I can buy that one. I can get that one right there. That'd be nice. You come back and what? Boom. Either you're stopped out. Best case scenario, you're stopped out for break even. You're smart and rolled your stops. Or you get stopped out for a loss and you went backwards. Either way, you collected no profit because you were chasing a monetary figure. You guys see where I'm getting at here? I want to make sure I'm clocking with you guys. These are the problems. These are the problems that you run into when you're chasing money. You start making these little mistakes. You do this 3 or 4 times a month, right? You're going to end up in the red. When you go back and evaluate your plan, you're going to see, man, I left 4 trades of 30 pips on the table. I left 120 pips on the table. And you're doing that consistently sabotaging yourself. And as Charles will say, you're just slowly bleeding. You're slowly bleeding out until eventually you die, in a trading sense. That's how it happens, guys. We've all been there. And Charles, Jason, and myself, both Jasons, we've all been here.